Okay, so let's make a full breakdown on the situation that we currently have on US oil. Now, from a weekly perspective, clearly we have a market that has created this W formation. Now, after a W formation, specifically a bearish W formation, what you expect is to see the market make a move to the downside, specifically to test the previous resistance here, now turned support in this area. So complete the formation. So immediately from the weekly, we have our downside target. What we can also notice is that it seems like the market already topped out here with the creation of this double top that, as I will now show you, however, is still not completed. So let's go down on the daily time frame. Now, as I was saying, we have our downside target from the weekly. However, on the daily, we must notice that we still have daily structure holding as strong support. In fact, in this move to the upside, okay, in this wave to the upside here, there is one candle which is not related to the move, which is this red candle here. So this candle is basically a strong demand area for US oil. Therefore, until the market will remain above this zone, we absolutely cannot be looking for any shorts. Okay, until the market remains above this area, looking for shorts would be very, very low probability because you would be shorting at daily support, which is never a good idea. Now, if we go and see what we have from a COT perspective on the CAD, which is correlated with oil, we can see that we went from a 38K net positioning all the way down to minus 35K and now minus 20K. So we went from having way more longs than shorts from an institutional perspective on the CAD, so 74K longs and 36K shorts, to having more shorts than longs with 43K shorts and 22K longs. So even though the demand for oil has been definitely picking up, we can still expect a retracement to the neckline of the formation before the continuation to the upside, just to take some liquidity. Now, the way in which we will be approaching this with students is very simple and is, as usual, in a reactive way and not predictive. If the market will remain above this area, the market can easily continue to the upside. But at the moment, we are not interested in the continuation to the upside because it would be too much of a low probability. But if the market will manage to break this zone to the downside, then we will have the daily time frame aligning with the weekly, because this previous support here, if the market breaks it to the downside, will be turned resistance at this area. And at that point, with students, we will be monitoring price action on the 4-hour time frame instead of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries with students, we will be taking a nice short with a very good risk to reward and very good probabilities for the continuation to the downside and the market to reach our downside target from a weekly perspective. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.